May 14th, 2026. Nasdaq opening bell. A chip company most people had never heard of watches its stock price nearly double in the first hour of trading. Shares priced at 185. They open at 385. By the closing bell, the number sitting next to the ticker CBRS implies a company worth something like 66 billion. The chip inside that company is roughly the size of a dinner plate. It has 4 trillion transistors on it. And 4 months earlier, OpenAI had reportedly agreed to spend 20 billion getting access to it. Not Nvidia. Cerebras. Here's the thing about that 20 billion number, though. It isn't the number in the actual press release. Rewind 3 months. It's not 20 billion. It's just over 10 billion. That's the figure Cerebras itself put on a partnership announced in the middle of January. Somewhere between January and April, in the reporting, that number nearly doubled. We're going to spend the next half hour figuring out exactly what happened in between and untangling it from a completely different 20 billion story that's happening in the same industry, at the same time, with the same round number, moving in the opposite direction. 2 threads. Same digits. Different deals. Let's pull them apart. Start with what's not in dispute, because there's plenty that isn't. On January 14th and 15th, 2026, OpenAI and a company called Cerebras Systems announced a multi-year partnership. Cerebras would deploy 750 megawatts of its wafer-scale AI chips to serve OpenAI customers. Rollout starts in 2026, continues in stages. Cerebras called it, in its own blog post, the largest high-speed AI inference deployment in the world. Trade press covering that same announcement, HPC Wire, AI Business, put a dollar figure on it. Over 10 billion. That's confirmed. That's official. That's the deal as Cerebras itself described it. So where does 20 billion come from? Fast forward to mid-April. A different kind of report surfaces, this time from the information relayed through Reuters and Yahoo Finance. It says OpenAI's commitment to Cerebras has grown. Not 10 billion anymore. More than 20 billion. And there's a new detail attached. OpenAI, according to this report, isn't just paying for chip capacity anymore. It's getting a stake in Cerebras itself. Sounds like an update. A sequel to the January story. It might be exactly that. It also might not be, and the honest answer is nobody outside a small circle of executives and reporters actually knows which, because this second number traces back to a single outlet. One report, repeated by many other publications, confirmed independently by none of them. That's not an accusation. That's just how the sourcing works. Hold on to that distinction, because we're going to need it. Now here's where it gets genuinely confusing, and where a lot of headlines, maybe even the one that got you to click on this video, start to blur 2 very different transactions into one. At the exact same time this Cerebras story is unfolding, there's a second, completely separate 20 billion figure floating around the AI industry. This one involves Nvidia. Nvidia is reported to be finalizing its own roughly 20 billion investment into OpenAI. Not OpenAI spending money to buy chip capacity from someone else. Nvidia putting money into OpenAI as part of a broader relationship reportedly worth up to 100 billion that had, by some accounts, partially stalled. Read that again slowly. One story, OpenAI pays Cerebras roughly 10 to 20 billion for chips. Other story, Nvidia pays OpenAI roughly 20 billion in an investment. Same number. Opposite direction of the money. Different company on the other end of the check. And as of the most recent reporting gathered for this piece, that Nvidia into OpenAI deal wasn't even final. It was described as nearing completion, terms still capable of shifting. So which 20 billion figure is the real one behind that dramatic thumbnail? Trick question. There are 2 of them, doing 2 different jobs, and neither one is as clean as it sounds when you first hear it. We're going to walk through both. But mostly this is a story about the first one. The chip, the company that makes it, and why OpenAI would want to spend that kind of money on something that isn't a GPU at all. Let's talk about what a wafer-scale chip even is, because this is where the story stops being about spreadsheets and starts being about something almost absurd from an engineering standpoint. Normal computer chips are cut from a big circular slab of silicon called a wafer. You slice that wafer into hundreds of small individual chips, like cutting cookies out of a sheet of dough. Nvidia's chips, AMD's chips, basically every processor you've ever owned, work this way. Cerebras looked at that process and said, what if we just didn't cut the cookies? The company's flagship chip, the wafer-scale Engine 3, WSE, 3 for short, is a single, uncut piece of silicon. One chip is the entire wafer. It measures 46,255 square millimeters. It packs in 4 trillion transistors and, according to industry write-ups of Cerebras' own specs, roughly 900,000 AI-optimized cores. One third-party estimate puts its surface area at about 57 times larger than a single Nvidia H100, the previous generation GPU that, until recently, was basically the default unit of AI computing power. That's not a small factory upgrade. That's a different manufacturing philosophy. Think of it less like building a bigger truck and more like deciding that instead of running a convoy of 1,000 trucks with drivers coordinating over radio, you build one enormous train car that never has to hand anything off to a neighbor. The convoy is flexible and cheap to replace piece by piece. The train car is faster, in theory, for exactly one reason. Nothing on it ever has to wait for a message from outside itself. That's the pitch, anyway. One number. Let that sink in for a second. 46,255 square millimeters. On a single piece of silicon. Manufacturing a wafer that large without a single defect ruining the whole thing is, by most engineering accounts, an extraordinary feat. It's also, as we'll get to later, exactly the kind of achievement that comes with its own very specific vulnerabilities. But first, how does a company even end up building something like this? Cerebras Systems has an origin date that, honestly, even the sources disagree on. Some say the company was founded in 2015. Others, including TechCrunch's own reporting, say 2016. It's a small discrepancy, but it's the kind of detail that tells you something about how quickly this company's story gets told and retold without everyone checking the same footnote. What isn't disputed is the trajectory. Small, ambitious chip startup, betting against the entire momentum of the GPU industry for roughly a decade. And for a lot of that decade, the company that kept Cerebras alive wasn't OpenAI. It wasn't any American tech giant. It was G42, an Abu Dhabi-based investor and customer. According to Cerebras' own updated 2026 IPO paperwork, G42 accounted for 85% of the company's revenue in 2024. 85%. That's not a customer. That's closer to a single point of failure with a business relationship attached. By 2025, that number had dropped to 24% of revenue. Real diversification, on paper. But it hadn't dropped because G42 walked away. It dropped because Cerebras found other customers to grow around it, OpenAI eventually among them. And that G42 relationship didn't just sit in the background. It actively blew up Cerebras' first attempt to go public. Here's the part of the story that barely makes it into the breathless headlines. Cerebras tried to IPO once already, back in 2024. It filed confidentially. And then it withdrew, not because investors weren't interested, but because the deal triggered a CFIUS review. That's the U.S. government's process for scrutinizing foreign investment in companies that touch national security. An Abu Dhabi-linked investor, sitting inside a company building some of the most advanced AI silicon in the world, was enough to freeze the whole process. So before this was a story about OpenAI, it was already a story about who gets to own the future of computing hardware, and which governments get nervous about the answer. Which brings us to the moment this story actually starts moving. By September 2025, Cerebras had pulled off something it needed badly, a fresh $1.1 billion funding round at an $8.1 billion valuation. A company that had just had its IPO frozen by national security regulators was still, apparently, worth over $8 billion to private investors betting on where this was headed. 4 months later, January 2026, the OpenAI deal lands. 750 megawatts. Multi-year. Over $10 billion, per Cerebras' own numbers. One more short number. February 2026, Cerebras closes another round. $1 billion, this time called a Series H. 2 funding rounds. 1 giant customer deal. All inside about 5 months. Was that speed a sign of genuine, overwhelming demand, or a company racing to lock in momentum before a fragile moment passed? The filings don't answer that question. They just show the pace. Now here's a detail that turns this from a chip story into something closer to a conflict of interest story, and it's worth sitting with for a second before we move on. Sam Altman, CEO of OpenAI, the company reportedly committing upward of 10 to 20 billion to Cerebras, is also an early investor in Cerebras. That's according to Reuters and Yahoo Finance reporting. The person deciding how much of OpenAI's money flows toward this chip company had already put his own money into that chip company years before the deal was signed. Is that disqualifying? Not necessarily. Early investment in infrastructure partners isn't unusual in this industry. But it is a fact that belongs in this story, not a footnote to skip past. When the buyer already owns a piece of the seller, how good is this deal? Really becomes a slightly harder question to answer from the outside. Let's slow down and sit inside the actual engineering story for a minute, because underneath the dollar figures, there's a genuinely strange piece of competitive history happening here, and it doesn't involve a single named hero or villain. It involves a shape. For the better part of 15 years, the entire AI industry organized itself around one design pattern. Take a workload too big for one chip and split it across many chips, wired together, talking to each other constantly. Nvidia built an empire on making that communication between chips as fast as possible. Entire data centers are, in a sense, giant conversations between thousands of GPUs, all trying to stay in sync. Cerebras's bet was structural, not incremental. Instead of making that conversation faster, eliminate as much of the conversation as possible. Put the entire workload, or as much of it as physically fits, onto one piece of silicon, so there's nothing to hand off in the first place. Nobody was forced into this decision by a single dramatic event. There's no leaked memo, no boardroom showdown in the material available here. What happened instead was slower and, in its own way, more interesting. Two competing philosophies about how to build the future of computing, developing in parallel, mostly unaware of exactly how the other side's bet would eventually be tested. A giant, capital-intensive, decade-long argument about whether bigger, uncut silicon beats smaller, tightly networked silicon, with the answer only now starting to show up in benchmark numbers and IPO valuations instead of white papers. That's the real tension underneath this story. Not one villain undercutting one hero. Two entire engineering worldviews, running as a live, expensive experiment, with OpenAI's checkbook currently sitting on the wafer-scale side of the table. So does the giant chip bet actually work in practice? Depends which number you're allowed to trust. Cerebras's own CEO, Andrew Feldman, wrote in a company blog post that large language models running on Cerebras hardware respond up to 15 times faster than on GPU-based systems. That's worth flagging clearly. That's a vendor making a claim about its own product, not an independent lab, not a neutral benchmark. The company selling the chip, describing the chip. There's a more specific number tied to an actual OpenAI product. Forbes reported that OpenAI's GPT 5.3 Codex Spark model, running on Cerebras hardware, hit 1,000 tokens per second, about 15 times faster than the previous version of that model. The same Forbes piece added a comparison point. Anthropic's Claude Opus 4.6, it said, runs at roughly 65 tokens per second. That comparison sounds damning. It also comes with a giant asterisk. The brief for this story is very insistent about. Token per second numbers swing wildly, depending on the task, the hardware configuration, and how the benchmark is set up. A number like that, sitting next to a competitor's name, is exactly the kind of figure that looks like a knockout punch in a headline, and looks a lot murkier once you ask measured how, exactly, and by whom. By late June 2026, Cerebras pushed the number further. On June 26th, the company said it would host OpenAI's newly previewed GPT 5.6 model, nicknamed Sol, on its WSE3 hardware starting in July, delivering up to 750 tokens per second, described, by the outlet covering it, as roughly an order of magnitude faster than typical Nvidia H100 deployments. Impressive, if it holds up outside a press release. Here's the puncture, though, and it's a real one, not a gotcha. Every single one of these performance numbers, the 15x claim, the 1,000 tokens per second, the 750 tokens per second, the H100 comparison, traces back to either Cerebras itself or a single reporting outlet. None of it, in the material available here, is confirmed by an independent, neutral benchmarking lab. That doesn't make it false. It makes it unverified. Those are different words for a reason. Which two labs are we actually racing here? There isn't a lab versus lab showdown in this story. There's a chip philosophy versus a chip philosophy, and only one side has published its own scorecard so far. Let's zoom out, because a chip is not just a chip, it's a geopolitical decision wearing a spec sheet. Governments have started treating who owns your AI compute the way they used to treat who owns your oil pipeline. Forbes's broader industry coverage describes governments increasingly prioritizing what's called sovereign compute capacity, the ability to run critical AI workloads on infrastructure your own country controls, or at least trusts. Data center operators, that same coverage notes, are actively diversifying their hardware stack specifically to avoid depending on a single supplier. That's the general climate. It's not a claim specific to the Cerebras OpenAI deal. It's the weather system the deal is happening inside of. And remember that CFIUS review that killed Cerebras's first IPO attempt? That's the sovereignty story showing up at the level of a single company's cap table. A chip company that spent years mostly dependent on Abu Dhabi money, trying to sell shares on an American stock exchange, got stopped cold by a national security review, before eventually going public in 2026 with a very different, more American customer sitting at the top of its revenue sheet. OpenAI didn't cause that history, but OpenAI's money is, in a very real sense, part of what lets Cerebras walk back into the IPO conversation with a cleaner story to tell regulators. One company, one chip, a national security review on one side of its timeline, a $66 billion valuation on the other. Now, the other thread. Because this story only makes sense once you see it standing next to its mirror image.
A different, Globinewswire syndicated projection puts the market at 17.73 billion in 2025, growing to 20.51 billion in 2026, and 36.97 billion by 2030. A third firm, Fortune Business Insights, using a broader definition, the whole AI inference market, not just the chips, values it at 103.73 billion in 2025, heading toward 312.64 billion by 2034. None of these are the household name research firms, no Gartner, no Trend Force, no Counterpoint, that tend to anchor confident headline numbers in this industry. 3 different firms, 3 different methodologies, 3 numbers that don't even roughly agree on what year the market crosses 20 billion versus 100 billion. That's not us being cagey. That's the actual state of the data. When you see a documentary or a headline, state one clean market size number with total confidence, that confidence is usually manufactured, not measured. So let's get honest about the limitations here, because they are not a boring footnote tagged onto the end. They are arguably the most interesting part of the whole story. Cerebras's own IPO filing, not a critic, not a rival, the company's own paperwork admits to a real problem. A Futurum Group teardown of that found Cerebras faces challenges aligning its hardware innovation with its existing software ecosystem, and needs to keep developing that software to offer a real alternative to Nvidia's dominant CUDA platform. Here is the blunt version of what that means. You can build the most physically impressive chip on Earth. If the tools developers already know how to use don't run on it easily, that chip is a beautiful, expensive paperweight for a lot of potential customers. There's a second limitation, and it's a physical one, not a software one. Cerebras's entire manufacturing pipeline depends on a single foundry, using a single manufacturing process, 5 nanometer. That same Futurum analysis flagged that is actively converting more of its 5 nanometer capacity over to a newer 10 nanometer process, largely to support Nvidia's demand. One factory, one process node. One giant customer down the hall potentially squeezing the very capacity Cerebras needs. A wafer-scale chip that takes up 46,255 square millimeters of silicon isn't just hard to design. It's hard to keep making, at scale, if the factory making it starts prioritizing someone else's order. Third limitation, and this one's about people, not silicon. Most working AI engineers know Nvidia's CUDA software toolchain, that's more or less the default language of the entire industry at this point. Cerebras's compiler is different. Independent analysis of the space notes that this skills gap could push a lot of infrastructure buyers toward good enough GPUs they already know how to program, rather than best-in-class wafer-scale chips that require retraining their engineering teams. There's a sharper way to put that. Being the better chip and being the chip people actually deploy are not automatically the same thing. One commentator, Dr. Antonio Bharadwaj, quoted in a piece from Foreign Affairs Forum, a less mainstream outlet than Reuters or Bloomberg, worth flagging as such, put it in a memorable way. Technological advantage in AI hardware isn't self-perpetuating. Computing history, in his framing, is littered with architecturally superior technologies that got overwhelmed anyway, not because they were wars, but because of the network effects and manufacturing scale of less elegant, more entrenched competitors. That's not a prediction that Cerebras fails. It's a reminder that objectively more impressive chip has lost to everyone already knows how to use the other one many times before in this industry's history. And then there's the limitation we already spent a while on, customer concentration. Even after all this diversification, the OpenAI deal and relationship, Cerebras's own still shows as a large share of its historical revenue. The company that once made up 85% of Cerebras's business in a single year hasn't disappeared from the story. It's still sitting in the filing. So here is where all four of these limitations point together. The chip is real. The performance claims are plausible but mostly unverified outside the company making them. The software ecosystem is behind. The supply chain runs through one foundry, one process node, and one bigger customer with more leverage. The people who would need to switch to it mostly don't know how, yet. And the company's revenue history is still shadowed by a single investor whose money once triggered a national security review. None of that means the bet is wrong. It means the bet is still, genuinely, a bet with real money and real government scrutiny attached to it, not a foregone conclusion dressed up as one. So where does this actually leave the number in the thumbnail? 20 billion is real, in the sense that it's a real figure that real reporters at real outlets have published. It's just not the confirmed, official, single number Cerebras itself has put its name on. That number, from the company's own mouth, is over 10 billion. The 20 billion figure is a later, larger, single-sourced escalation, reported by the information and relayed by others, that also happens to come bundled with an unconfirmed detail. OpenAI supposedly receiving an equity stake in Cerebras that nobody outside that original report has independently verified. And it's not the same 20 billion as the Nvidia into OpenAI story, even though headlines built around this topic will keep bumping the two into each other because the number is catchy and the players overlap. What actually changed between January and April 2026, a genuine expansion of the deal, or a number that grew somewhere in the retelling. On the evidence gathered here, we can't fully close that gap. That's not a cop-out. That's the actual, current state of the public record. What we do know, cleanly, a company that almost got shut out of the US stock market by its own national security exposure is now worth roughly 66 billion, largely on the strength of a partnership with the world's most talked about AI company. A chip the size of a dinner plate is reportedly about to run one of OpenAI's next major models at 750 tokens per second, starting in July 2026, a date that, as of this recording, is still live, still unresolved, still something we'll actually get to check against reality rather than take on faith. Cerebras says the rollout of its 750 megawatt commitment to OpenAI continues in stages through 2026 and beyond. Nvidia's roughly 20 billion move into OpenAI, last we heard, was still nearing completion, not signed, not final, still capable of changing shape before it does. 2 threads. SAM number. Neither one finished yet. So when July comes, and Cerebras either does or doesn't deliver the performance it's promising on OpenAI's next model, which of these 2 billion stories do you think turns out to have been the bigger deal, in every sense of that word? This script was built strictly from the sourced research brief prepared for it, with every disputed or single-sourced figure flagged in the language used rather than presented as settled fact. Some numbers here: deal totals, performance benchmarks, market size projections, remain contested or unverified as of this recording, and viewers should treat them accordingly.